Hello, this is Nedu, your Forex coach. In today's video, we're going to be looking at some practices, some things that you need to do, all right? Some procedures that you need to follow. Very key procedures you need to follow to make sure that your trading is in order. And I term these best practices in trading execution, best practices, for trading execution, those things that you need to do. Please don't miss any one of them. They are all important. They're all important. All right. If you're coming here for the first time, we say welcome to our channel, and together we'll build, a robust skill acquisition for everyone that has a desire to build a career in forex trading. And video today will further enlighten you and get you closer to consistent profitability. These all are efforts, in ensuring that everyone develop a skill that will guarantee his consistent profitability while trading the forex market. Of course, you understand by now that the market is very complex, and you need to follow a set of rules and have to be disciplined in doing this to ensure that you're not a victim. But if you follow these rules, these tips, these very informative materials I will bring you every Friday here, you would have observed by now that you are making tremendous progress in your trading. All right, best practices in trading execution for profitable trading. All right, I'm going to share my screen with you. All right, guys, here we are. We're going to discuss these best practices, best practices for profitable trade execution. All right, and number one on our list today is to develop. You have to develop a trading plan, a winning trading plan, winning forex trading plan, forex trading. And of course, this is so important. It's actually at the very first step after you have completed your forex education and you have done a lot of back testing on some of your strategies, and this will enable you to come up with a profitable, a winning strategy, a strategy that have seen you have consistent results over a period of time. All right. And then the forex trading plan is all about rules that you're going to set for yourself, rules which include your strategy. It includes the time that you're going to trade. It includes your risk management, procedures, your position management, and the currencies that you're going to trade, the time that you trade them. All these will have to be spelled out in your plan. And that plan should not be complex, should not be too voluminous, one-page plan that you can easily reference. We have a video on how to write a winning forex trading plan. I would like you to go there and watch the details. But first things first, you have to develop a winning forex trading plan. And then the next thing to do is to analyze. Of course, now you begin to analyze the markets, analyze the charts, analyze the markets, looking at the charts, analyze the markets. Okay, analyzing the markets, following your trading plan rules. You analyze the markets either technically, fundamentally, or a combination of both of them. You're looking at the price charts. Maybe you want to identify trends, what kind of market environment that you are in. Is the market trending upwards, or it's trending downwards, or it's just trading, sideways? You really need to analyze the market now. What are you actually doing in this analysis phase? You are trying to identify, that takes us to the next level, the next stage, which is identifying opportunities. Okay, analyzing the markets, you are looking at maybe the charts, you are looking at the charts with some of technical indicators, or you are reading up some fundamental information, maybe the economic news releases, some economic decisions taken in the economies that you are trading, the currencies. You just want to have a combination. For instance, if maybe the European Commission and bank, the CB, has maybe hiked their interest rate by 50 basis points, or maybe they are trying to, they're giving a body language that they're going to do that in the next meeting, all right? So that, of course, what that will to cause the euro to gain some strength. And of course, you pay it with any weak currency based on some fundamentals, maybe economic news releases, maybe there is an increased inflation, something happening in the economy that has the capacity of weakening the value of that currency. Okay, so you pay them. You're looking at them from the fundamental, aspects of your trading plan. Okay, so whatever it is that you are doing in analyzing the markets, this is the stage you have to analyze the market following the plan, the set rules you have put in stage 1. And the purpose of this is to identify, all right, identify opportunities. Identify trading opportunities. All right. And you do this by observation. You're observing the charts to check out for some, trade setups in the price charts based on the set requirements you have in your trading plan. And I said at this stage, you might be looking at some maybe price chart patterns, all right, looking at candlesticks, maybe some wave formations, okay, or price swings, whatever it is, you're trying to identify these and then come up with a trade setup, all right, a trade setup. And these will help you to develop your bias. Now you're going to have a bias, something coming into your mind after you have seen this setup. Okay, this Euro USD based on this setup, price is trending. I'm just giving you some examples. Price is trending, upwards. Price is trending upwards in this manner. Market price is doing this. Okay, you're seeing this on a high time frame. All right, okay, and you have your trend line drawn. Price is trending upwards, and at this point, market price has come to this level. What decision do you is coming to your mind? You're having a bias in your mind that market is trending upwards and it has approached my trend line, drawn trend line. All right, there is a possibility of a bounce off, a possibility of this happening. All right, so this is a picture coming to your mind. Okay, this is a picture coming to your mind at this point. You're identifying opportunities. All right, analyzing the markets is for you to identify opportunities in form of trade setups. Okay, trade setup. So while you see this, you may need to choose to analyze, have a bigger picture of what is happening here. It is a 4-hour time frame. You might choose to move this to 30 minutes time frame at this point to check a few things happening around here. And we say that your currency pair is here, Euro USD. Euro USD is the currency pair for this particular setup that is coming up here. All right, so you've seen this, prices approach a trend line. There's a possibility of bounce off if this trend is still valid. You may want to find out what are the conditions, what are the things that is driving the euro, causing the euro to rally against the dollar. You may need to find out fundamentally what is weakening the dollar against the euro, what is strengthening the euro against the dollar. All right. So what are you doing at this point? You want to look inside here to find out what actually is happening and to develop more information. So the next phase, the next step will be to confirmations now. Confirmations. You've already seen a trade setup. Now you're looking at confirmations. You're looking for more reasons, cogent reasons, both technically and fundamentally, that will strengthen your bias. The setup, price has reached a trend line, and one of the options is for it to bounce off. When price approaches a trend line, there are two possibilities. It can bounce off or it can break through. All right. So you at this point, you need to check for more confirmations, get more information technically. Technically speaking, you can add a few more indicators to your charts if you like indicators. All right. Maybe you can add a stochastics. Stochastics is right here. Okay. I have stochastics on these charts. So you might decide to look, where is the stochastics at this point? Put this vertical line here. At this point, the stochastics is just right at 20. Okay. And the percentage K and percentage D is trying to cross over. And of course, the stochastics is one good technical indicator that helps also identify overbought and oversold positions, right? And if this is the case, as you know, when you have this setup, this case is that the stochastics, the percentage K and the percentage D has gone below 20 and they are about turning at this point. You are just getting more information. The more data you have available to confirm your bias, the better. All right, the better. So you look for more reasons. You can just this technical reason. Then what are the fundamental reasons? What that is causing this trend to continue? You want to know that want to confirm that this trend is still valid, and the conditions that cause this trend to start are still there. They're still valid. There's still no change in those conditions. You might just need to make a quick check on the European economy and then the United States economy, a few of the economic news that have been released, maybe on the GDP, inflation, interest rates, all right, or employment, any of those information that can strengthen the bias that is coming to you. The first bias that will come to you at this point is that the price will bounce off, and you need to develop a bias. All right. So more confirmations coming from your technical or further, digging further, on the fundamental analysis will, strengthen your trading bias. In other words, you have more information that will convince you to buy or to sell at this point, to buy or to sell. All right. Then when this is confirmed, you are successfully scaled this level, this stage. Will move to step 5 will be entry techniques. Entry techniques. See, as a forex trader, you really need to be a process and systems person. You need to follow through processes and procedures, and this is important. See, if you want to stay in the market for long and be profitable for life, you need to follow through policies that you have set up, your rules, your trade plan, and be disciplined to follow them. All right, be disciplined to follow them for continuous improvement. All right, there is no one who would engage in any venture without first planning. If you don't plan and discipline yourself to follow your plan, you've already planned to fail. And your objective in trading the market is for you to make profits. And to make profits, it is planned through a process. You're following these processes. Don't jump any of them. Follow them through. You see, it is like a roadmap to profitability. If you follow this map, follow these steps, these procedures, the only outcome is that you're going to be profitable, and you need a lot of patience. You really need a lot of patience. All right, applying your entry techniques, very important. Now you have come up with a trade setup. There's a trade setup here. All right, as a trade setup here, maybe around this point, you'll be expecting, maybe you'll be looking forward to getting maybe some candlesticks formations like the engulfing candle, any bullish candle signal. All right, maybe something like this. This is a bullish signal here. This bear candle and this is a bull candle, totally engulfed the bear candle right at this point. If you see this here, all right, so this will give you stronger reasons to believe that this bounce off is going to happen. You can just like to check also with your Fibonacci retracement tool. You can look for your Fibonacci from this point. You drag it from the low to the high. All right, most bounce offs, most retracements end between 50 and 61.8 levels. So at this point, if it falls within that retracement zone, then you have more reasons. Okay, now entering the trade, follow through and follow through your entry techniques, procedures. We also have a video on these best entry procedures. All right, you have to develop a checklist of things that must be fulfilled. Right now, you have a setup. The price has gotten to this trend line, and Stochastics is showing oversold. And Fibonacci retracement is telling you that the price has gotten into the retracement zone. All right, and now you are looking at entry. What are those criteria you have listed for yourself before you enter the market? You can also use some price structures. If you saw this on maybe 1 hour time frame, you might want to do this. Price usually we do something like this right here at this level. Market price might do this. We are trying to buy the market. A lot of times price in a lower time frame can do a W like this. Okay, so if this is 1 hour time frame and you move it to 15 minutes time frame, you might see something like this. Price would like to make a low. It would like to make a low here. You can see this low at this point. This is a low here. And these are other equal lows. Coming here to retest this established level of support. It came down here and was rejected. It pushed up, got there again. A lot of times, a secondary test of price at a level will guarantee a bounce. So some people call it a spring. You see market price starts moving up. And you want to see this price behavior is consistent over a period of time. This is what price does. You know, sometimes you can see, you can develop an entry window. You can develop an entry window. You can look at a window of 20 pips like this. Price has come into this point. All right, just look at price behaviors while here. It can return here, come back at this point. Now it's beginning to make lower, highs. This is a low, and this is a higher low. You can begin to make higher lows. All right. When price begins to do this, it's indicative that the bounce off is confirmed. So you're getting ready to enter a trade. All right. So it's beginning to make that. It can get to this level of resistance and is rejected, pushes back here. Okay, back to this level, this high. You can see this is a high. Back to this high, and it comes back up here, breaks it. So you can see a previous level of resistance is becoming support. We call this complex. Price does this a lot of time. It does this a lot of time. All right. You can see at this point again, this level you have drawn. Okay, this is just an entry zone that you have developed, an entry zone of about 20 pips. All right, from this one, maybe 10 pips below this points of intersecting the trend line, and then about 10 pips above it. So that gives you 20 pips window. You want to micromanage price on lower time frame by looking at the behaviors of price, because when price begins to make these higher lows, it's getting ready to journey in your expected direction. And we are seeing a behavior here which can guarantee you an entry. Okay, in structure, we call it confluence, price making a high, and then breaks that structure, returns back to that same level. Most of the times it will go up. This is confluence. Okay, it can break now. Price has, as when price has broken your entry zone, right? So you can call this price entry zone, this window. I call this window price or price reversal zone. All right. Here's price reversal zone. All right. So here, from here to here, price reversal zone, and you're trying to check price behavior around that zone. When it finally breaks it, it will come back to retest. Once this has happened, these are options, recommended options that you can follow to take a trade. If you missed it here, all right, if you missed it here and price has eventually broken this level of resistance and comes back to retest it, you can actually enter your trade at this level, can do an instant execution, instant buy here, and about 5 pips below this low. 5 pips below this low to put your stop loss, and then you can set up your profit target based on your risk reward ratio set in your trading plan. Okay. Another way you can enter this trade is while the market is at this level of previous level of resistance, forming a confluence, you can come here maybe 2 pips above this high to put a buy stop order. Can set up a buy stop order. The current market price becomes your stop loss, and then you can do 1:3 ratio around this area will be your take profits. Maybe around here will be your take profits. Okay, around here will be your take profits. So this area becomes your take profits, which may be about 3 or 2 times your risk. So here will be your TP. Okay, so TP, all right. There is an entry, the entry in the market here. This level is your stop loss. All right, I hope this makes sense to you. You're not applying your entry techniques, all the conditions that must be fulfilled. You may have it in your criteria that the stochastics must be in the oversold position for you to enter, all right? And you also might be checking a few fundamentals, all that you have written down as your entry criteria that must be fulfilled. And of course, very importantly, you need to check if there is a fundamental news, economic news release that has the capacity of affecting this Euro USD. So any news on the European countries, maybe France, Germany, all right, or Italy, any of their economic data that they release, check whether it is within the maybe 1 hour or 1 hour 30 minutes away. If it's very close, maybe 15 minutes or 30 minutes, for even 45 minutes, you might decide to hold on and see what price will do until after that news has gone. Anything that has capacity, find out if there's any news that has capacity of, taking you out of this trade prematurely should you execute it instantly. So that's taking precaution. Whatever it is that is on your checklist for entries, please be patient enough and wait for them to be fulfilled before you can enter the market. We have a video on best entry techniques in the market. I'm just trying to highlight some of them here. We treated them in details. You can get that video and watch it. It's very informative. It can help you improve on your trades. Okay. All right. So we'll move to the next step. That's the sixth, position management. Position management, and this is also vital that you observe this while you are taking a trade. It's assumed at this point that you have already taken, opened a lot of positions, and they're all running. You need to check that your real leverage rate, okay, what it is. The recommended real leverage rate is between 2 and 10. If you don't know what real leverage rate is, please watch our video on position management. It has a lot of information that will help you. Okay, that will help you in taking care of this. And see, the reason for this is, in risk management, we're taught on how to manage the risks for each positions that you take, so you can take the 1% or not more than 1% of your account. You're risking not more than 1% of your account in any position that you are taking. But at what point do you stop opening positions? That's what real leverage rate measures, and we are saying that real leverage rate should be between 2 and 10. If it's more than that, you should not enter any position. Be sure that the real leverage rate is healthy, so that you don't expose your account to additional risk. Watch our video on position management. This helps you just to know the number of positions that you can open at any given point in time based on what your account balance is, your margin balance, what it is. And then finally, the final step here is a review. You need to review your performance at the end of the day. Review your performance, for the day. This helps you, in making some adjustments for continuous improvements. All right. If you don't just overlook the trades, whether you want, maybe in your trading plan, you said that you're going to take maybe 5 trades in a day, or your trading targets, daily trade target or profit target is maybe $150 or $200 a day. And today you hit that target. You don't just allow it to go. Sit down for some minutes on your trading desk to check what are the things that you actually did. What are the things you did differently? What are the things you mastered that made you get this result? If it was a losing day, find out what errors that you make. Review so that you can adjust for continuous improvements. Okay, I believe this video made sense. This information I brought to you today made sense. Would like you to click on that like button and also subscribe to our channel, and click also on the alerts bell, so that each time we post a new video, you are going to get it. You're going to get the alerts. You're sharing it with your friends will make it possible for us to get this information across to many retail traders as possible. All objectives to ensure that everyone becomes profitable following this set of rules. Trading is not a gamble. Successful traders never gambles. You follow a predetermined plan, and then the rules set for your trading, ensure that you follow them so that you can have the results that they were designed to have. Thank you so much for joining us today. I will see you again in our next video.